I'm Ashesha Advaryu. With me is Kanishka Sarkar joining us from our Delhi studio. And more comments coming in from US President Donald Trump, where he says that he's looking to substantially raise tariffs on India. And for pharma products as well, they could rise to 150% and then eventually to 250% over the next 1 year. We'll discuss all that and more in greater detail. But first up, let's have a look at how the American markets performed yesterday. And Kanishka, US markets ended in the red yesterday, isn't it?
Absolutely, Ashisha. Very good morning to you, first of all. It was a losing day on Wall Street, marking the S&P 500's fifth down day in the last 6 days and the Dow's sixth negative session in the past 7 sessions. The S&P 500 fell about 0.5%, whereas the Nasdaq Composite that slid about 0.7%. On the other hand, we had the Dow Jones Industrial Average that moved about 0.1% lower. Now, the street was weighing weaker than expected economic data as well as fresh tariff comments from US President Donald Trump. Now, today the street will monitor earnings reports, slated from Disney, Uber and McDonald's, followed by Airbnb, DoorDash and Lyft. Now, while there's no economic data of note expected today, traders will follow speeches by Federal Reserve officials, including Boston Fed President Susan Collins and San Francisco's Fed President Mary Daly during the day. So those are the cues that we are tracking as far as US markets are concerned. But of course, the spotlight is on the increased tariffs that he's threatening now.
Well, yes, that's as far as American markets are concerned. But let's also put the spotlight on how the oil market performed in trade yesterday and for today as well. Remember, Brent crude has now snapped its 4-day losing streak. It is trading with marginal amount of gains in trade today, up nearly 0.25% as we speak, and trading near that $67.8 per barrel mark. Several factors continue to remain at play for the oil market. One, traders are assessing Trump's comments to impose secondary tariffs on crude imports that are being done from Russia. So that continues to weigh heavy on the oil market, although it has given up all of those gains that we saw in the last few trading sessions, and it is now trading sub that $68 per barrel mark. But if we look at the monthly gain, now remember, for 3 consecutive months, Brent crude ended with gains. So in the month of May, we saw gains of about 1.2%, followed by a 6% uptick in June, 7% uptick in July. But this month so far, in the month of August, oil prices have declined by about 3% from the highs of nearly $72, $73 per barrel that we saw at the end of July. Let's also put the spotlight on how the gold market is performing, because safe haven demand seems to be returning, at least in the gold market. It is currently trading near that $3,382 per ounce mark, and it is gaining for the fifth straight week, and this is the longest streak of gains that we have seen since February. And as I mentioned, safe haven demand seems to be returning on account of the turmoil that we are seeing in the global market. And that is the reason we are seeing some bit of momentum resuming back again in the yellow metal market. But as I mentioned, more comments coming in from US President Donald Trump and more trade threats are coming in. The US President said in an interview last evening that he will sharply raise tariffs on India within the next 24 hours, slamming our continued purchase of Russian oil. Calling India an unfair trading partner, Trump also plans sweeping hikes on global drug and chip imports and has also warned that pharma tariffs could soar to nearly 250% over the next 1 year. My colleague Shrishti Sharma is now joining us with more details on this.
Well, yes, tariff continues to be at the center stage of Trump's latest commentary, and along with that, interesting comments on who will be heading the next and will be the next Fed chair. Firstly, let's start with a commentary on India, where Trump is actually saying that he actually plans to substantially raise tariffs on India within the next 24 hours. That will be interesting to note. But along with that, if we also see the comments sector-wise, he's actually threatening of a sharper increase in the tariff rates with respect to pharma as well as semiconductors, and maybe within a week these fresh tariffs will be announced, and these tariffs will actually start small, inching higher to 150% and going as higher as 250% is what he's saying. He's also highlighting the fact that it's Switzerland that has been making a fortune out of exporting the drugs to the United States. So definitely all eyes on that, and that will be an interesting development to note. But along with that, with respect to EU, is actually warning 35% of tariff on the EU if they can't meet the obligations. On China deal, Trump is actually quite happy. He's saying that US is close to a China deal right now, and maybe in the times ahead, if a deal is through, he will be planning to meet Xi Jinping as well. And along with that, with respect to the champion recent trade deals with Japan and EU, he also made comments over there. But along with that, with respect to who could be heading and will be the next Fed chair, he's actually saying that Scott Bessent has actually declined the consideration for the Fed chairs. He mentions two other people aside from the two Kevins for the Fed role as well. So definitely the market will be watching this particular development very closely. And lastly, on the energy prices, Trump is saying that if the energy prices fall, Putin will stop killing. So these are the big commentary that we are tracking this particular morning coming in from President Donald Trump. Back to you.
All right. Thank you so much, Rishi, for taking us through the latest commentary that's coming from Donald Trump. But, to get into more specific, let's actually listen into what Trump had to say about his meeting with Russia and the capital that flows in because of tariffs.
Well, I never said a percentage, but we'll be doing quite a bit of that. We'll see what happens over the next fairly short period of time. But we'll see what happens. Yep. They have a meeting tomorrow. We have a meeting with Russia tomorrow. We're going to see what happens. We'll make that determination. We're taking in trillions, not billions, trillions and trillions of dollars from other countries who, for years, took advantage of us. They took advantage of the United States like we were children, and that's not happening anymore. Now they're paying a lot of money, and they're paying hundreds of billions of dollars. Individual countries paying hundreds of billions of dollars. You're seeing what everybody else is seeing. And we have a lot of things we can do. One of the questions asked of me this morning is, are you going to make a dividend to the people? And the purpose of what I'm doing is primarily to pay down debt, which will happen in very large quantity. But I think there's also a possibility that we're taking in so much money that we may very well make a dividend to the people of America.
In fact, let's also go across and listen into what market expert Ajay Bagga had to say on this.
We'll have to protect these sectors. At least the employment has to be protected till new markets are found or new uses are found for those factories. There will be some amount of issues, maybe a 0.3, 0.4% on the GDP, which is a big drag. So that's why I'm saying we have to have a fiscal stimulus measures ready to counteract this.
All right. So those are the comments coming from Ajay Bagga, but let's also discuss the global macro setup and what to make of these latest comments coming from Trump. From Peter Cardelos, the chief market economist, Spartan Capital Securities LLC. Hi, Peter. Good morning. Thank you so much for joining us this morning. Of course, we have to talk about, before we get into the markets and further cues, what are you making of the latest tariffs coming on, announcements coming on the tariff front? It could go up to 250%, is what Trump is saying. What are you making of these comments?
Well, I think, obviously, once again, Trump is putting pressure, and obviously he's threatening steeper tariffs so that he can make, eventually he can make deals, especially with countries like with India. Whether or not those steep tariffs will go into place, I'm not certain of that. I think that eventually we will see lower tariffs being imposed, and of course, the fact that he says he's taking in trillions and trillions of dollars, yes, that's probably correct, but let's not forget that even a baseline of 15% or 10% tariffs is inflationary. So, yes, he's paying down debt, which he basically said. And, yes, the trade deficit will shrink, and you will get a false reading on economic activity from that. But consumers are not likely to go out and spend as they were 6 months ago because of higher prices.
He also spoke about tariffs on pharma, where he says that it will be raised to 150% in the next week or so, and eventually to 250% in the next 1 year. Is this even realistic? I mean, what impact will that have on the US inflation market, and is the 250% really realistic?
No, absolutely it's not. I think it's just, threats and 200, 250. I guess countries that export drugs will have to just shut down their operations. That's not possible. But again, could it go into effect for a week or two? Possibly, but it's not a sticking point.
Okay. Peter, now shifting focus to energy then. Now, given Trump has given statements about potential sanctions on countries that purchase Russian energy, and India's NSA Ajit Doval, he is in Russia currently for, strategic meetings. How do you see this whole scenario unfolding? Trump is also expected to have talks with Russian officials. So what could be the potential outcomes of these two meetings with India and USA separately from Russia?
I think they'll probably find some sort of agreement, and whether I don't think that India is not going to trade any longer with the United States. I think it will. Will it trade with Russia on oil? Probably, but maybe split the trade of oil between the United States and Russia, instead of just buying all its oil from Russia. There's a possibility that they will buy some from the United States. I think there'll be a mutual agreement. Look, what we're seeing here is not only a war of tariffs, but a war of words. And at the end, there'll be some sort of an agreement. Of course, this war of words can weigh heavily on the markets, not only in India, but here in the States and on a global basis as well. But if you look at really what's happening in most of the global markets, they've been concentrating on the fundamentals, and those fundamentals are earnings, which have been extremely good. And so, yes, you get a 1 day maybe pull back on tariffs or tariff threats or whatever the case may be. But eventually, investors look at the fundamentals. And I think that's what's going to transpire over the next couple of weeks, when Trump announces tariffs on chips and of course pharmaceutical products. And you might have a 1 or 2 day scare, but after that, I think that those steep tariffs that he is talking about will bring the trading partners to the table.
Perhaps some kind of negotiation is what we could see between the US and India and several other countries over the next few days. Peter, thank you so much for taking your time out and joining us here today and helping us understand what the macro setup is looking like this morning. But shifting focus back to Indian equity markets then, and it was another lackluster session on Dalal Street yesterday, with the Nifty consolidating for the third straight session. Snehi is now joining us with a roundup of yesterday's trade. Snehi?
If you take a look at how our markets panned out yesterday, not much of a negative move coming in for our market, given the way Donald Trump's comments were expected to impact the market. We've just seen a 0.3% fall coming in on the Nifty, and Nifty has ended yesterday just shy of that 24,650 mark. Similar moves coming in on sensex. A 0.4% cut is what we've seen. Even Nifty banks continue to be under pressure, almost 0.5% cut coming in on Nifty bank. The broader market was a mixed move coming in. Both of them closed in the red. The mid-cap index was lower by 0.4%, but the small cap index did nominally better than the benchmarks and the rest of the market. Just a 0.2% cut is what we've seen on the small cap index. It was really names like IndusInd Bank, Titan, Maruti Suzuki, SBI Life, Coal India and Trent that were in focus and did well and aided the Nifty to a little extent. On the flip side, pressure sustained from Adani Ports, Reliance, Infosys, Adani Enterprises, ICICI Bank and Eternal. Those were some of the laggards on the Nifty. If you take a look at sectorally, it was a mixed kind of day of trade coming in yesterday for the market because Nifty, auto and metal, these were the only two sectors that managed to end in the green. It was names like Maruti, TVS Motor that hit its all-time high, Eicher Motor, MRF, Bajaj Auto, M&M. These were some of the stocks that did well. On the flip side, if you take a look at the top losing sector, that was Nifty Pharma. That was highly under pressure. Names like Glenmark, Oro Pharma, Cipla, Lupin, Gyan Pharma and Dr. Reddy's, they were trading with cuts in yesterday's trading session. All in all, if you take a look at the biggest losers yesterday following Pharma, you had FMCG, Realty, IT, banks, media, PSU banks and energy that have ended the day in the red. Of course, all eyes today are going to be on the MPC outcome, the commentary that we get from the RBI governor, and all eyes are going to be on that as well and how the market is impacted. So some important levels to watch out for today. But well, yes, this is how the markets have ended yesterday. An important day of trade to watch out for today as well.
All right, all eyes on RBI policy outcome done. But before that, let's also take stock of how the FNO setup is looking like this morning. And Pulkit is joining us with just that. Pulkit, good morning. Over to you.
Good morning, Kanishka. So if we look towards the FNO setup, let's start with the India VIX. The value of India VIX is around 11.71. It is in the comfortable position. No need to worry here. Let's move towards the PCR changes. That is the put call ratio. For Nifty, it is 0.73. And for Bank Nifty, it is 0.77. For Nifty, it is a weekly one. And for Bank Nifty, it is the monthly PCR. And both are in the comfortable range. For the change in open interest for index future, for Nifty, it is very small. That is 0.64% only. And the activity that was seen was short build up. For highest highest open interest on any strike price, for put it is 24,000 and for call it is 25,000. Let's move towards the Bank Nifty. For Bank Nifty, the change in open interest is little high, that is 18.62%, and the activity was short build up. For highest open interest strike price for both put and call, it is 57,000 only. Let's look towards the FII long position. For FII long position, it is very low, that is 8.4%, and it is on a multi-year low. For DII, it is around 68%, and for FNO band shares, only one company is in FNO band, that is PNB Housing.
Looking like today. Pulkit, thanks so much for joining us with all those details. But let's also put the spotlight on what the trade setup is looking like today. And to discuss exactly this, we are now joined by Abhishek Gaushande, Head of Research of ET Now and ET Now Swadesh. Abhishek, morning. Tell us, what is the trade setup looking like and what are the key factors that we need to watch out for in trade today?
Good morning, Ashisha. So mainly if we can start with the US market, so no major positive clues are coming out from the US market post the commentary from about the second round of a tariff from the US president. This US market has also entered into the negative after reporting a strong after delivering strong returns on the Monday. Again on FI activities also sluggish. I think yesterday was the continuously 12th day when FIs were net sellers, but the pace of the selling has been come down. Then we can talk about the Asian market. So initially the Asian markets are initial markets have been opening on a positive note, but that's not so much. Third is from this gift Nifty is initially down. The fear mongering in the street is that now Trump is indicating that in next 24 hours he will introduce substantially high tariffs on India. So it will it is making street nervous again, and I think the street will take time to digest this thought process. Exactly what is exactly going on in this diplomatic front, because once you have already implemented a 25% kind of a tariff, now what is the reason to go beyond this kind of this kind of commentary and this kind of action when India and US have a very strong relationship. Again, the rupee is also depreciating in coincidence with the FI selling, and that is also we have to keep in watch, because today this RBI is going to announce its monetary policy. So net the setup is appearing for a kind of a consolidation in the initial period. The market setup will be more clear after the RBI governor's speech. But one important factor here we have to keep in watch what this Pulkit has mentioned, that the FI long position is now multi-month low. I think he has mentioned somehow about 8.4%. So it means that the FI short position in the market is almost 92%. In this kind of a situation, what happens generally is that if something would come out on the positive side, some surprising positive news would come out, then definitely market take a leap and short covering happens in the market. That lifts the market. So, but let's watch what kind of news it will come at this point of time. Only the one event which is appearing on the table is that the RBI's monetary policy.
Okay, so all eyes will be on RBI MPC today, which will begin at 10 a.m. All the coverage on ET now. But apart from that, Abhishek, also tell us any important stock that we need to keep an eye out on today.
Yes, the three, four stocks may be on our radar. First is on the Bharti Airtel. So Bharti Airtel is, although it has its EBITDA was only marginally up, marginally ahead of our estimates, but the key thing is that the performance was largely driven by the increase in its ARPU in the Indian business. So ARPU is now at 250 against 245 in the previous quarter. And second thing is that the African business has grown by 6 to 7%. So these two things are the key positive things. I think during the day management is hosting a con call, and post that the material things would come out from the Bharti Airtel. But initially the numbers are appearing quite okay. Second is on the pharma stocks. Here we have to keep on watch, because now US President has said that he will going to impose 250% kind of a tariff in on this pharma sector for in next 1 to 1.5 years. Now, from an Indian perspective, we see that first of all, in US market, almost 90% of the prescribed drugs volume coming from the generic side, but the generic segment only contributes 13% to the overall drug expenditure. So in terms of volumes, yes, generic drugs are very high, but in terms of the value, these are not very significant. And here in the Indian players largely plays in this generic space only. So almost 60% of the this supply is coming from the India. So it's not possible in a logical way. It is not possible for any country to set up this kind of factories or this kind of R&D in a year or two. But yes, at some point of a time it may happen if the cost would justify, but in near term I don't think that it would have a substantial impact on the volumes. Even if it will come on the value terms, then Indian players will definitely pass it on. That is the understanding at this point of a time. So on the pharma space, defense stocks will also come on the radar, and because this IDAC has cleared a proposal of procurement of rupees 67,000 crore. In the auto space, the two major companies, Hero MotoCorp and the Bajaj Auto, will report their numbers. Numbers are not expected to so good. In terms of the Hero MotoCorp is expected to report a 6% kind of a decline in the profit. Bajaj Auto is expected to report a marginal increase in the profit because of their lackluster volume performance. Key thing to watch out from this result is that what kind of a commentary will come out from this management for the demand side, especially that what kind of a demand they are looking during the festive season. And second is that what is the status of this rare earth metal availability.
All right, thank you, Abhishek, for taking us through all those factors. RBI policy outcome, latest on pharma, and a whole host of stocks to keep an eye out for in today's trading session. But on that note, we'll take a very short break. Be right back with more on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat.
Let's get going with all the stocks that will be in focus today. And for that, our research team is now joining us, Shrishti, Sharad and Rabinder. But Shrishti, let me come to you first then. Pharma stocks will be in focus, and apart from that, a whole host of defense counters will also be in focus today.
Absolutely. All eyes will be on the pharma space, specifically after President Donald Trump commentary that he will be coming out with the tariffs on pharma and semiconductor as well within the next week or so. And along with that, the tariff plan will start at a smaller rate but going higher to 150% and eventually 250% is what he's penciling in. But along with that, he's also saying that Switzerland is actually making a fortune out of exporting the drugs to the US markets, and that may be the silver lining over there, given the fact that, yes, of course, India remains to be the key exporter in the generics market, but Switzerland remains to be a branded market, and there lies the differentiating factor. So yes, of course, the overhang remains for the Indian pharma space till the time the final tariff rates are through, but seems like the indication, or rather this particular stringent move, could be more towards the branded pharma players. But till the time the tariffs are through, we can't comment specifically, but all eyes will be on the pharma space. But along with that, the defense counters will also be in focus on the back of a positive news announcement, because Defense Acquisition Council has actually cleared the proposal worth 67,000 crores to enhance the operational capability of the armed forces. So a whole host of counters will be something that we will be watching out for. And along with that, it will be an important day for the markets, as we also have the RBI MPC meet outcome. This time around, there is no hope of a rate cut. But along with that, if at all that happens, the whole host of banking counters and NBFCs will be the key to watch out for. And well, of course, all eyes will be on commentary as well.
All right, thank you, Srishti. So a whole host of pharma stocks, defense and banking names are in focus today. But Sharad, you've picked out Bharti Airtel, Britannia and Gujarat Gas, all earnings counters. How were their numbers yesterday that came in?
Telecom major Bharti Airtel came out with its numbers, and largely the numbers were in line to positive set, with the ARPU numbers hitting the 250 rupees mark for the quarter. Of course, the last quarter, the sequential quarter to be compared with, that number stood at 245 rupees. However, the numbers, the revenue and EBITDA were above estimates, margin were in line, but PAT, there was numbers reporting below the estimates. The Africa business, the company stated a good performance coming in and a strong management commentary also coming for this business, with a 6.7% growth coming in terms of constant currency. Also, Britannia mixed to slight weak numbers coming in, as EBITDA was partially impacted by the stock appreciation rights, which is basically an employee expense cut hitting the PNL. The marginal uptick was seen in demand in both the urban and the rural areas. Overall, the margin saw cuts of almost 135 basis points on a year-on-year basis. Gujarat Gas, on back of earnings, weak set of numbers, especially on the operational front. However, company came out with its record high productions and volumes as well, but net the numbers have been a dampener, with the EBITDA margin cracking almost going up actually by 118 basis points on a year-on-year basis, but sequentially there was a downtick as well. But net an operationally weak quarter coming in for Gujarat Gas.
Okay, so operationally weak quarter for Gujarat Gas, but a whole host of other companies also reported their numbers. Rabinder, tell us which are those companies and how are the numbers?
Well, as Prestige Estate can be in focus, where company reported that Q1 number, and company's revenue saw an uptick of approx 24% year-on-year basis. And if we talk about net profit, the net profit also saw an uptick of approx 26% year-on-year basis, but company's EBITDA margin saw a decline from 42.8% to 38.7% year-on-year basis. And company said that they have reported a best ever quarter in terms of sales and collection. Apart from this, Lupin can be in focus on back of the quarterly result, where company reported a strong set of number in Q1, and company's net profit saw an uptick of 52% year-on-year basis at rupees 1221 crore, and US sales for the Q1 FY26 was up by 24.3% year-on-year basis. So back of the strong Q1 number, Lupin can be in focus. Moving to next, Navin Flooring can be in focus in today's trading session, where management said that the strategy focus remains on scaling the HF businesses, and they say that the R32 sales to US comprise almost 25% of the total revenue, with 15 protected under anti-dumping duties, offering a partial pricing support. Management also highlighted that the advanced material segment is emerging as a long-term growth driver for the company, targeting approx 15% revenue share by FY30. And lastly, IRCTC can be in focus in today's trading session, where company has got in principle approval from the RBI to operate as an online payment aggregator. So back of this, IRCTC can be in focus.
All right. So lots of stocks to track today. Thank you so much, Srishti, Sharad and Ravinder for taking us through that entire list. But moving on, let's also take stock of which are the cues that we need to watch out for today in this trading session today. And Snehi is joining us with just that.
Well, yes, lots of cues to watch out for, but most importantly, all eyes are going to be on the RBI MPC outcome and RBI Governor Mr. Malhotra's speech that follows after that. Any commentary, any outlook on stance, inflation estimates, GDP estimates, all of these are going to be very closely watched out for. So that's the biggest cue that we will be tracking. Other than that, globally from Eurozone, you have retail sales numbers, so watch out for that as well. In terms of global earnings, some major companies are going to be coming out with their earnings, the likes of Honda from autos, Novo Nordisk from the pharma space, Disney, McDonald's, Shopify. Lots of companies will be coming out with their earnings. But in terms of earnings action back home, you have three Nifty companies coming out with their numbers. That's Hero MotoCorp, Bajaj Auto as well as Trent. But from the broader end of the market as well, a whole host of stocks like Blue Star, Bharat Forge, Wright, Godrej Agrovet, Jindal Stainless, Fortis Health, Ircon International and so many other companies will be coming out with their earnings, so watch out for all of these stocks. In terms of annual general meetings, you have Godrej Agrovet, Pidilite, Blue Star and Birlasoft that will be having their AGM. Any important commentary on this front will also be key to watch out for. And lastly, in terms of corporate action on board meetings, all eyes are going to be on Fortis Healthcare. The board is going to be mulling changes to its existing NCD holders' rights, so that is going to be important to watch out for. Pidilite board is going to be mulling bonus issue along with their Q1 earnings as well as their AGM. Ramco Cement and Coal India will be trading ex-dividend, and it's also going to be the last day to buy the shares of Karur Vyasa Bank to be eligible for dividends. So watch out for all of these cues, all of them very important to track.
But as Snehi mentioned, the most important cue will be RBI MPC today. Snehi, thanks so much for joining us with all those details. But let's also take a look at how Asian markets have opened this morning. And Nikkei has opened with marginal amount of gains today. In fact, that one is up 0.4% as we speak, 0.5% higher for ASX 200. Nikkei 225 is up 0.6%, 225 points higher for Nikkei 225. Kospi is down 0.3%. Shanghai index, that one is absolutely flat at the moment. We have Hang Seng index, that one is also very flat. And Nifty implied open is also suggesting a tepid start for the Indian markets, down marginally by about 15 odd points near that 24,691 mark. So we are not getting any concrete signs from the Asian market, although the Japanese market has started with some amount of gains. But on that note, we need to slip into a very short break, but more news and updates will continue on the other side.
At least 77% of the polled economists are expecting no rate cut. But Ashisha, what else is the street penciling in?
Well, yes, Kanishka, as you rightly mentioned, the expectation largely is that we are not expecting a rate cut this time around. But remember, the odds of rate cut have risen after the announcement of 25% tariff on India came in from US last week. So after that, clearly the odds of rate cut have risen. But despite that, largely the expectation is of a no rate cut. Now earlier, 97% economists expected status quo, that is no rate cut, and now that has fallen to 77% after the imposition of 25% tariff. Now to put things into perspective, repo rate currently stands at 5.5%, SDF rate at 5.25%, SLR and CLR at 18% and 4% respectively. Factors at play continue to remain very in support of the economy. So IIP stands at 20-month low. We have CPI, which currently stands at 2.1%, which is at the 77-month low, and demand concerns continue to weigh heavy on the Indian economy. As far as growth estimates are concerned, remember the actual GDP growth for the fourth quarter of FY25 stood at 7.4% and 6.5% for the full year FY25, which was at a 4-year low. As far as growth forecast is concerned, remember RBI has estimated FY26 GDP forecast to come in at 6.5%, IMF at 6.2%, World Bank 6.3%. So broadly, the estimate of GDP for FY26 ranges anywhere between 6.2 to 6.5%. Now, as far as CPI estimates are concerned, in April this year, RBI was predicting CPI for the full year FY26 to come in at 4%, but it was then lowered to 3.7% in the June estimate that came in. As far as GDP estimates are concerned, RBI is penciling in 6.5% GDP for the first quarter, 6.7% for the second quarter, and 6.5% for the full year FY26. But Kanishka, yes, as you mentioned, largely the expectation is of a no rate cut this time around. But we also spoke to a whole host of experts on what the key expectations are from the MPC meet. Let's go across and listen into what they had to say.
Going into FY27, where because of the base effect, most certainly inflation will look higher than the 3.2% average that we're talking about, at least in terms of our forecast for FY26. So it will be harder to cut then than it will be to cut now in terms of the inflation outlook point of view. And, transmission both to the lending rates and the deposit rates, that's something. But I think also we need to think about transmission to another important factor, which is the small savings rates.
If we believe in this particular theory that inflation will be crossing 4% in Q4, let's look at this kind of a situation. We lowered the repo rate to 5.25, and maybe after 2 months when you call us on this panel, we'll again say there will be a divided view. Again, we'll say lower it to 5%. We'll actually be talking of a real rate of around 1% or 1.25%. And today, of course, it looks 3%, now go down to 1.25%. So I think I'll go with what the governor said. We need to be forward-looking.
Today, the issue is demand. And the supply side measures in terms of liquidity and rate cuts may not be sufficient enough to boost credit demand just because of one more additional rate cut ahead of the festive season. They've already done a little too much, which is 100 basis points rate cut, given 11 lakh crores of liquidity, another 2.5 lakh crores impending. Transmission of the same is already underway in the system, not yet complete. So they can wait for that to go through.
Given that growth is likely to slow down in H2, when government spending may not be adding the kicker that it is adding right now, it's best time for giving private consumption and private investment a chance by lowering rates by 25 basis points when inflation is not a concern.
All right, so all eyes on RBI policy outcome later today, but let's also shift focus to some more national stories. Prime Minister Narendra Modi will inaugurate Kartavya Bhavan at Kartavya Path in New Delhi today. He'll also address a public program on the occasion. Next up, India's National Security Advisor Ajit Doval has arrived in Russia for a high-level visit aimed at boosting strategic ties between New Delhi and Moscow. His visit comes amid growing diplomatic tensions between India and the US over India's continued imports of Russian oil.
At least 4 dead and dozens feared washed away in the Uttarkashi district of Uttarakhand after flash floods triggered by torrential rain hit the Khyr Ganga river. Meanwhile, Home Minister Amit Shah spoke to Uttarakhand Chief Minister Pushkar Singh Dhami to take stock of the situation. Shifting focus to some global stories then, US President Donald Trump says new tariffs on semiconductors and chips could be announced as soon as next week. In an interview, he said the move aims to boost US manufacturing and reduce reliance on Taiwan. The announcement follows fresh tariffs on several imports.
All right, shifting focus to some earnings then. Chipmaker AMD has posted weaker than expected earnings, even though its revenue edged past estimates. This was led by a slump in AI chip sales as US export restrictions effectively killed its $800 million business in China last quarter. Next up, Supermicro shares tanked 15% in after-hours trade after the However, Maker missed Q4 estimates and issued a tepid outlook. Revenue rose just 7.5%, a sharp slowdown from last year's AI-fueled surge. Earnings fell short, with Trump-era tariffs also denting margins.
App shares nosedived after the company's second quarter revenue per user fell short of expectations despite beating on daily active users and guiding third quarter revenue above street estimates. A botched ad platform update slashed ad prices, dragging down top-line growth for the company and pushing the net loss to over $260 million. And in a blockbuster deal, Disney's ESPN is set to acquire key NFL media assets, including full control of NFL Network's TV and streaming rights. The league will still own and operate Red Zone, NFL Films, and digital platforms like NFL Plus. Commissioner Roger Goodell called it a move to bring more football fans in new and innovative ways.
With Trump's ceasefire ultimatum expiring Friday, reports say that Putin remains unmoved. The Russian leader reportedly doubts the bite of fresh U.S. sanctions and insists on capturing 4 key Ukrainian regions before considering peace. While Trump has threatened 100% tariffs on buyers of Russian oil, the Kremlin believes it can weather the blow. Next up, Sweden, Norway and Denmark are jointly pledging $500 million to a NATO-led effort to send U.S. weapons like Patriot missiles to Ukraine. The initiative follows Trump's plan for Europe to foot the bill while the U.S. supplies arms. Leaders say the move boosts Ukraine's defense, deepens transatlantic ties and sets new standards for rapid military aid as Russia's war drags on.
And on that note, we need to slip into a very short break, but more news and updates will continue on the other side. Don't go anywhere.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
Growth was absolutely flat on a sequential as well as on a YY basis, but there was a change in the mix of the company. When it comes to that mix, then it was the two-wheeler sales that actually remained flat on a YY basis, but the domestic volumes have actually declined 8% on a YY basis. And in that as well, the three-wheeler sales has actually shot up 7.5% on a YY basis. But overall, if we look at the contribution of the two-wheelers in their export, that contribution has now fell to 38% from 40% back in Q4. So all of these factors will impact the margin and the other numbers of the company. Let's talk about that. And firstly, on the revenue front, 12,244 crores is what we are penciling in. EBITDA expected to show a decline of 2% on a YY basis. 2,359 crores is our expectation. But the key to watch out will be the margin. 19.3% is our expectation, and that will be a fall on a YY as well as on a sequential basis. And lastly, on the profit figure, we are anticipating a number close to 2,000 crores. But along with that, if you look at the other factors that will impact the numbers of the company, that given the weak demand, adverse mix, the currency headwinds might also impact the overall performance of the company. But going ahead, all eyes will be on the management commentary when it comes to the demand profile, as well as going ahead, how are they planning the new product launches. All of these things will be the key to watch out for.
So all eyes will be on management commentary, but Srishti, stay on with us because Hero MotoCorp is also set to report its first quarter numbers with volume pressure and unfavorable mix expected to drag margins lower this time around. Tell us, what are we expecting from Hero MotoCorp this time?
Well, this time around, when it comes to Hero MotoCorp numbers, then we have seen a volume decline of 11% on a YY basis. There was a plant shutdown, and along with that, the company has been facing some issues in their entry-level segment. All of this has impacted the volumes of the company. But in the earnings, the key to note will be the margin profile. And this time we are expecting the margin to be steady at 14%. Well, of course, that will be a dip on a YY as well as on a sequential basis, but not a big fall is what we are anticipating. And this will come on the back of the average selling price hike, and along with that, it will be good to note that the company has been ramping up their EV sales. They have been gaining the market share in the EV category, and despite the fact, despite that EV unit putting pressure onto the margin, the company is expected to show a resilience performance over there. That's about the margin, but along with that, on the revenue front, we are expecting a number close to 9,863 crores, and the profit is expected at 1,060 odd crores. That will be a bit of a 6% decline on a YOY basis. But along with that, in the management commentary, the demand outlook, how are they seeing the EV sales to grow going ahead, all of these factors will be the key to watch out for.
All right, so Bajaj Auto and Hero MotoCorp among two key earnings that we'll be tracking today. But with that, we're completely timed out on this edition of Market Cafe. Ashesha and I will take your leave, but don't go anywhere as the market will take all the action forward.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the